your roadmap to the latest in auto. Welcome to Highway Herald. Today we're diving into a lumber-laden showdown between President Trump and America's closest neighbor. In early 2025, tensions between the US and Canada splintered sharply when the White House laid down a 25% tariff on Canadian softwood lumber, reviving one of the oldest, thorniest disputes in North American commerce. And while politicians traded barbs, US timber titan Weyerhaeuser felt the real-world sting, announcing a jaw-dropping 50% profit nosedive for the second quarter. From desperate Senate shuttles to British Columbia and backroom investment overtures, the pressure is rising like sawdust in a cyclone. Here's how it's all unfolding. A trade war rekindled. US fires up the tariff chainsaw. February 2025 marked the moment Washington took a sledgehammer to the softwood status quo. The Trump administration imposed a sweeping 25% tariff on Canadian softwood lumber, while keeping oil and energy products under a separate 10% rate, reigniting a decades-old cross-border trade battle. This move came on top of the 14.54% in anti-dumping and countervailing duties set in August 2024, pushing the total levy burden dangerously close to 40%. Just days before the announcement, the U.S. Commerce Department finalized a 20.56% anti-dumping rate on Canadian imports, signaling that this wasn't a negotiating tactic. It was economic muscle flexing. Weyerhaeuser's CEO hailed the measure, claiming it finally offered relief to struggling domestic mills. Meanwhile, Ottawa, clearly rattled, began weighing a dramatic policy shift, considering export quotas for the first time in decades. With goodwill evaporating, this trade standoff is now a full-blown collision course. And the financial fallout from that decision didn't take long to show itself. Weyerhaeuser's profit plunge when policy hits the P&L. By the end of July, the trade war's economic aftershocks were felt in the boardroom of Weyerhaeuser, a cornerstone of North American timber. The company's Q2 earnings painted a bleak picture. Adjusted profits were sliced in half, from $173 million, or 24 cents per share, in Q2 2024 to just $87 million, or 12 cents per share, in 2025. Revenue slipped to $1.88 billion, slightly above Wall Street forecasts, but the sharp profit decline triggered immediate investor concern. On the earnings call, company leadership didn't sugarcoat the outlook. Executives projected another $60 million drop in Q3 profits, citing softening builder sentiment and mounting pressure from tariff-fueled input costs. Lumber and OSB, oriented strandboard, prices slumped during the quarter, showing just how sensitive the sector is to policy uncertainty. In response, Weyerhaeuser has gone defensive, investing in timberland, expanding engineered wood capacity, and launching a $100 million stock buyback. But even strategic moves can't insulate it from geopolitical friction. These aren't just numbers, they're symptoms of deeper systemic strain. And Weyerhaeuser isn't alone in feeling the strain. Homebuilders across America are bracing for ripple effects. Before we delve deeper, we'd appreciate it if you could subscribe to Highway Herald. Your support fuels our drive to bring you the most engaging auto and trade insights every week. Homebuilding Blues: How Tariffs Hit the Foundation. In May, as new tariffs loomed and interest rates continued their upward climb, the U.S. housing market took a sharp turn. New single-family home sales plunged, marking the steepest drop in nearly 3 years and sending a chill through the construction sector. Behind that drop is a domino effect. Builders began hitting pause, alarmed by rising material costs and policy volatility out of Washington. Analysts now warn that if tariffs persist, the average cost of a new home could spike by up to $14,000 by 2027, a gap wide enough to push some buyers out of reach entirely. For lumber producers like Weyerhaeuser, the warning signs are blaring. Unpredictable pricing, fueled by supply gluts and trade uncertainty, is dampening demand from sawmills to job sites. While groups like the U.S. Lumber Coalition applaud the tariffs as long overdue, builders argue the real-world costs are too high. But while the U.S. housing sector stalls, Canada is rewriting its strategy altogether. Canada recalibrates: quotas, capital, and global markets. Canada has shifted from defense to strategy in the softwood lumber trade war. Trade Minister Dominic LeBlanc highlighted $1 trillion in Canadian pension investments in the U.S., growing by $100 billion annually, as a quiet form of leverage. While not officially tied to tariff negotiations, it signals that Canada has economic tools beyond rhetoric. Prime Minister Mark Carney is holding firm, emphasizing the need to protect Canadian workers over rushing into a deal. In a historic pivot, Ottawa is now open to softwood lumber export quotas, a long-standing U.S. request previously rejected. This shift gained traction during recent visits from bipartisan U.S. senators seeking a managed trade solution. Meanwhile, Canadian lumber exporters are adapting, cutting their U.S. share from 78% to 68% by May 2025 and redirecting shipments to Europe and Asia. Canada is blending diplomacy, diversification, and capital strength in a bid to reshape its trade posture and withstand mounting U.S. pressure. But America isn't just watching. It's ramping up domestic production with a controversial plan of its own. America's logging revival, promise or pipe dream? As Canada rewrites trade strategy, the U.S. is heading deep into the forest, literally. The Trump administration has unveiled an aggressive plan to boost domestic timber output, including a 25% increase in federal harvests and a rollback of the 2001 roadless rule, opening more forested land to logging. On the surface, it's a play for self-reliance, but analysts caution that these changes might add less than 1% to national supply, hardly a game changer. Still, regions like Skamania County, once a logging stronghold now littered with shuttered sawmills, are cautiously hopeful. Some mills are investing in automation, while others brace for legal delays as environmental lawsuits loom. In a twist, even Canadian lumber firms are setting up shop in the U.S. South, where pine forests and lower operating costs offer safer margins, tariff-free and log-rich. The U.S. Lumber Coalition backs the tougher approach, but real questions linger. Will these efforts meaningfully revive the industry, or just trigger fresh battles over environmental sustainability and legal red tape? Verdict: cross-border timber clash reaches the breaking point. The U.S.-Canada softwood lumber clash has escalated into a pivotal moment. No longer just a trade dispute, but a collision of deeply rooted policies, economic interests, and national strategies. What started as a 25% tariff on Canadian lumber has morphed into a full-spectrum standoff that's forcing both countries to rethink long-held approaches to cross-border commerce. Weyerhaeuser's dramatic Q2 earnings plunge revealed how quickly political decisions can disrupt major industries. On the other side, Canada's sudden openness to export quotas and the leveraging of its $1 trillion pension capital show that this is no longer just about retaliatory duties. It's a bold strategic shift toward long-term resilience and global diversification. With no clear agreement in place, both sides risk deeper fallout, potentially impacting not just timber producers, but also homebuyers, builders, and supply chains tied to housing, manufacturing, and even vehicle production. The outcome of this standoff could reshape North American trade policy for years to come. So now we ask you, do you believe Canada's pivot toward diversification was a smart long-term move? Will the U.S. logging expansion strengthen the domestic market, or spark environmental and legal backlash? How might this trade friction affect prices in your own industry or community? Share your thoughts in the comments. We want to hear from builders, buyers, and industry watchers alike. If you enjoyed this breakdown, don't forget to subscribe to Highway Herald for more in-depth auto and trade coverage. Thanks for watching and see you next time. You can now check out any of the videos on the screen. There's more exciting and informative content waiting for you.